Auspicious day. Go right now, log into the websites and get your seats and hotel rooms confirmed because Ayodhya is frequently getting sold out and there is a lot of rush as far as the inauguration of the Grand Ram Temple.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and with me now is Mr. Shanti Lal Jain, the Managing Director and Chief Executive Officer of Indian Bank. Thank you very much for joining us. Good set of numbers, almost 62% profitability in the quarter under review announced last week. Mr. Jain, take us through what was the real driver in terms of that increase in profitability and do you think that the NII increase is going to sustain over the next few quarters?
Yeah, so net profit growth is 62 is up on the back of NII growth, which has grown by 23%. And NII growth is backed on the business numbers. We have grown 12% in RAM, retail, agri, MSME, as also in corporates. What happens, you grow more in a retail side, you have good margins. At the same time, we protected our domestic CASA at 41%. So liability side, it's 41% growth in CASA, 9% deposit growth, 12% business growth has all culminated into a NII growth. Other income has also grown by 9%. And other income has grown on the strength of our fee-based income, which has grown by 11%. Treasury income has grown, PSLC income has grown, bad debt recovery has grown. So it's an all-round growth, sir. And these numbers are basically sustainable. You see last quarter also we have grown in the same percentage and half year we have grown NII by 24%.
Mr. Jain, margins declined 9 basis points quarter on quarter to 3.52%. What is the reason for this decline?
So actually at the beginning of the year we said that our net interest margin will be 3.41% with a plus minus 10-15 bps. Because we are in an increasing interest scenario, and the cost has increased by 9 bps because of non-reason. Non-reason is because of the deposit repricing. But in whatever we guided at the beginning of the year, 3.41 plus minus 10-15%, we are at 3.57% for a half year. So this is based on the guidance given. And the growth, deposit cost is increased with the non-reason, sir, with the deposit repricing.
Okay. How does the CASA book look like? Any further increase in the savings account rate? Because the cost of deposits has obviously been on an increase.
CASA, we are in an increasing interest scenario where the price differential between the saving rate and the term deposit is there, sir. Even though we have grown by 8%, term deposit growth is 10%. So always endeavor is to grow our CASA saving deposit so that we could contain our deposit cost. So we'll continue to endeavor on this line, sir.
Mr. Jain, could you indicate to our viewers, especially those who are, already borrowers and paying EMIs for various products for home or for auto loans, and those who may want to do it because we are now in the run-up to Diwali, what is the interest rate scenario going to be like? And as far as your bank is concerned, what will you have to offer to customers?
So this retail deposit rates are basically repo linked, and repo is virtually stable from we are imposed from last 2 or 3 policies we have seen. But all banks are giving good interest rates on the retail loan. Our interest rates are also very competitive, from 8.4 minimum to 8.5 or later on based on the CIBIL. So we are offering you very, very competitive rates. And when the banks, in fact, the term deposit rates are in the range of 7.25, 7.5, the rate of 8.4 is very competitive.
Do you think interest rates are likely to harden even further?
The way that deposit growth is happening, the way the credit growth is happening, naturally, slight bit hardening can happen, sir, because we need funds to fund our deposit credit growth.
Therefore, what would you say to those people who are looking to invest in real estate, because we have seen what is happening to real estate prices, and in most parts of the country real estate prices are extremely high. Are you concerned about the valuations in real estate? Is there a risk of a bubble that some customers might be getting into, Mr. Jain?
Now, you see that there's a retail deposit, retail credit growth is happening. Because why? Because the sector itself has become very clean because of the RERA and all. Banks are offering very competitive pricing, and banks are offering even 80%, 85% of the loan. So I think this is the right time for the investors to go for housing. And now we also seen that the people are going for affordable housing, increase in housing. People are working from home, so there's a demand for housing. So I think the customers should avail the housing loan facilities, which is very, very competitive from the banking sector.
Mr. Jain, are you saying that there is no risk, therefore, of a bubble in the real estate sector? Because without, it is of course location specific, but prices have gone up very, very sharply in the last 4 to 6 quarters.
The prices are always based on the demand supply, sir. Prices are also because of the increase in the raw material prices, cement prices, steel prices, all are factored in the pricing. But as far as banking sector is concerned, sir, banks are offering loan at a very, very competitive prices. Tax benefits are available. So there's an opportunity for customer to buy houses.
Okay. Take us through your own understanding of what is happening as far as economic growth in the wider economy is concerned, in terms of your corporate loan book. What are you picking up in terms of how the economy is doing from the demand that your clients are coming to you with?
So you saw the GDP growth is expected to grow at a 6.5%. The income level of the citizens are growing. The financial conditions of the country is improving. And as a result, we are seeing that the investment demand is also picking up. We are getting proposals from the cement side, textile, even NBFC, even roads, in infrastructure. So city gas, the number of sectors we are getting proposals. Therefore, there is a credit growth, sir, in a double-digit growth we are seeing.
As far as your own loan book is concerned, between retail and corporate, how would you compare the two?
In Indian Bank, we always have around a 61-62% retail. So we are maintaining RAM at 61-62% and a corporate at 38%. Our growth is very balanced growth. Our RAM has grown 12%, our corporate has grown 12%. Even our retail has grown 14%, agri 16%, and MSME 5%. Even retail housing loan is growing 13%. Auto loan is growing. So our growth is basically very balanced growth. And you see our balance sheet from last 5-6 quarters, you find that the growth is in all sectors, and that is a recipe for continuous good performance.
What about slippages? How has Q2 been as far as any fresh slippages is concerned, and your views overall as far as your NPAs are concerned?
So there are two things, sir. From last year also, our recovery was more than our slippage. First quarter also our recovery was more than slippage. Second quarter too was recovery more than the slippage. If you see 23, our slippage was around 6,600, recovery was 8,500. Even in the first half of the current year, 3,700 slippage, 4,200 recovery. So recovery is more than slippage. This is one. Second one is, see the slippage here, the corporate book of this 570 crore of a slippage. This is basically in two accounts. Otherwise, SMA1 and SMA2 numbers are coming down. So this can be, you can treat as one-off item. Otherwise, our collection efficiency is better. SMA1 and SMA2 numbers are better.
What is the latest as far as your QIP plans are concerned? You have received approval of 4,000 crores. can you share an update with us?
So we have a board approval of raising 4,000 crores. We have a shareholders approval of raising 4,000 crore during the financial year 23-24. So we will be approaching to the market at appropriate time during this financial year for raising capital up to 4,000 crore.
And therefore, you are maintaining that you intend to close this within the current financial year in the current 2 quarters that are left.
Yeah, your approval is to raise within this financial year.
All right, Mr. Jain, thank you very much for your time with us today to take us through the headlights of the performance in the second quarter. That was Shanti Lal Jain, the Managing Director and Chief Executive Officer of Indian Bank. After profitability in the quarter went up to 1988 crore, up over 62%. We'll be back with more. Until then, goodbye.
Hello and welcome. You're watching Business Today.